Geojit Chief Investment Strategist Dr. K Vijayakumar join us to share his views on Union Budget. Welcome, sir. Let's start with your assessment of the budget.
In one sentence, this is a very good budget. From the market perspective, I will even say that this is an excellent budget. Now, it is not possible to please all sections of the society because the finance minister is always operating under constraints, revenue constraints. Revenue is limited. But in this budget, the finance minister has done her level best to please all sections of the society as much as possible. So I will describe this as an all-encompassing, growth-oriented budget. If you want me to give a rating to this budget, I will give an A+ to this budget.
What are the important features of the budget?
Well, I will summarize the salient features of the budget in 4 or 5 points. Number one, this budget is not a populist budget. It is a budget which focuses on serious economics. It focuses on fiscal consolidation. From the stock market perspective, fiscal consolidation is important because foreign institutional investors, all investors, domestic institutional investors, even HNIs, retail investors, all of them will be looking at the financial stability of the economy. If the financial stability is endangered, there can be big problems that Sri Lanka, Pakistan, Bangladesh, etc. are going through now. They are in the IMF seeking a loan. That is the problems caused by financial instability. Therefore, fiscal consolidation is important. In simple language, fiscal deficit should be within limits. During COVID, our fiscal deficit shot up to 9.2%. That was all right because it was very abnormal, extraordinary, a crisis-like situation. But then the government laid down a roadmap for reducing the fiscal deficit. In last year's budget, the fiscal deficit target was put at 6.4%. That was achieved. In this year's budget, the target is put at 5.9%. So there is and also the government has laid down a clear roadmap for fiscal consolidation to bring down the fiscal deficit to less than 4.5% by 2025. So that is something very important. The market is impressed by that. The second feature, and perhaps a very important feature, which was highlighted by all those who supported this budget, appreciated the budget, and even those who were critical of the budget were supportive of this particular point. This is a growth-oriented budget which has given a lot of importance to capital expenditure. Now, a very important issue in Indian economy right now is that manufacturing capacity utilization, that is very important. The capacity utilization in manufacturing reaches 75%. Capital expenditure normally happens. But it is not happening now. It is a little bit unusual, but the explanation is you have a war going on in Europe. And during war, you do not know what will happen next, particularly when one of the side is a military superpower like Russia. Therefore, investors are holding back their investment plans. That is why private capital expenditure is a little bit sluggish. So to compensate for that, the government is compensating for the deficiency in private capital expenditure. This is called, in economics, we call it compensatory financing. So the government is increasing public expenditure, and this year's public expenditure allocation is a massive 10 lakh crores. Last year it was 7.5 lakh crores, which itself was very ambitious. So this year it has been raised by 33% to 10 lakh crores, and that will be 3.3% of the GDP. So this kind of massive capital expenditure can lead to revival of industrial growth and growth of the economy in general. So that is the second point. The third feature from the taxpayers' perspective, from the perspective of the middle class and the taxpayers, is that the income tax new regime has under this new income tax regime, there are lots of relief for income taxpayers. In our discussion that we had, the pre-budget discussion, which was telecast a few days before the budget, we had discussed this point And I had said, my opinion is that the concessions and the relief will be in the new income tax regime without any exemptions, because that is the focus of the government, to reduce exemptions as much as possible. So now, I'm not going into the details because all of us know that. The fact is, if your income is up to 7.5 lakh a year, you don't have to pay any income tax at all. 7 lakhs, there is tax rebate, and there is 50,000 standard deduction. So a person who is getting an income of 7.5 lakhs a year don't have to pay income tax at all. So 7.5 lakhs is more than 3.5 times the per capita income of India, which is 1.97 lakhs. So I regard it as a very big relief. And for those who are in the higher income tax brackets also, there is relief. Then for senior citizens, there was a limit of 15 lakhs for investment in senior citizen savings scheme. This has been raised to 30 lakhs. So that is a senior citizens friendly initiative by the government. These are all very positive things. Then from the perspective of the backward sections of the society, the poor sections of the society, the government has been taking care of them by declaring the Garib Kalyan Yojana, Pradhan Mantri Garib Kalyan Yojana, under which every individual was given food grains of 5 kilograms a month free. And that this entails a massive food grain subsidy, right? So the benefit of this is being availed by 82 crore people. So this is a massively subsidized food security program. This program is being extended for 1 more year. So that is a big poor friendly initiative of the government. So altogether, I would summarize and say this is a budget which embraces all sections of the society, an all-encompassing, growth-oriented budget.
The market response has been volatile. Why is this so?
This point also we discussed in our earlier video, which we did before the budget. And now a concern in the market, a fear in the market was that the government might increase the long-term capital gains tax, because the capital gains tax is a little bit complex, and in the process of simplification of the capital gains tax, the lower taxes, long-term capital gains tax on equities and equity mutual funds, may be raised from the present 10% to 20%. That was a fear, but that fear did not materialize. So that's a big relief. That was the big relief for the market, and the market rallied. Sensex shot up by more than 1,000 points in the early hours of the budget, early minutes or the early hours of the budget day. But then the market turned highly volatile because of not the problems in the Indian market, but because of the big crash in the price of Adani stocks. So that was the problem there. There are two stocks, Adani Enterprises and Adani Ports, in the Nifty. So there was a big crash in Nifty halfway through the budget day. So the problem was with the Adani stocks. Now there is an issue there, and the market regulator SEBI is inquiring into that. So since the inquiry is on, we cannot make a comment on that. Therefore, I am refraining by making any comment on that. But then I will make one point. Our stand had been that Adani stocks are overvalued. There was no justification for the high valuation, 300 PE, 400 PE, 650 PE for some Adani stocks. And in one of the articles that I wrote, I think it was in October Geojit Insights issue, there was one sentence in one article which I wrote. The sentence, I'm quoting the sentence: "The stratospheric valuations of Adani stocks are a matter of concern." Right? In an article which I wrote in Economic Times also, this very sentence was reproduced. So when valuations are very high, that high valuations cannot be permanent. There will be correction. So the higher the valuation, the sharper will be the correction, and that is what we are witnessing now. But this dust will settle very soon, and the market will be back to normal.
What should investors do now, sir?
Well, under normal circumstances, a very good budget like that would have led to a rally in the market, particularly because we did not have a pre-market rally. But because of this Adani crisis that is roiling the markets now, the markets are a little bit tentative, but the dust will settle down. What investors should do is, during times of difficulty like now, high quality stocks will be available at attractive rates. So high quality large caps, the blue chip stocks, particularly in IT. IT is on a very strong wicket now because the possibility of the US avoiding a recession also is high now. They might succeed in soft landing the economy. Yesterday the Fed came out with a less hawkish statement, only 25 basis point rate hike. That was what the market expected. Therefore, the Nasdaq is very strong now. If the Nasdaq is strong, our IT stocks will do well. So IT stocks are in a strong wicket. Then capital goods will be doing well because of this focus on capital expenditure programs. High quality banking stocks have corrected, so they present the buying opportunities. So calibrated buying on decline should be the investment strategy. For investments in small and mid caps, investors should always ideally follow the strategy of systematic investment through mutual funds.
Thank you, sir. Thank you very much.
Thank you.